Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of the S&P 500, ticker symbol SPX. And so here we are looking at it on the daily time frame on Sunday, April 7th, following the trading week that closed on Friday, April 5th at a price of $5,204.34, being up just about 1%, a little over, on the day after having this massive red candle on Thursday, coming down 1.23% on the day with a bearish engulfing candle, not only engulfing the previous day's candle, but the day before that as well. So not looking so good there. And it does look like we have broken below multiple uptrending trend lines that had acted as support. We do have this white uptrending line that we did confirm below. And then I did also add this yellow uptrending line based on prior pivot lows. And it does look like we have also not only broken below that, but also confirmed below it with this massive bearish engulfing candle, getting a close below both of these candles. So I do think that further downside could be in the future for the S&P 500. I do think it might be a good time to start shorting, as I have been saying, basically this whole year. But with this, I do think that we always tend to see fake outs and tests that would confirm the breakdown. So I do think that the S&P 500 could be going higher to test, this yellow uptrend as resistance now. And so I could definitely see price going higher, potentially hitting new all-time highs, going above $5,264.85, which was the high hit on March 28th, that Thursday before the long weekend. And so I could see that level being tested again, possibly even, hitting much higher highs, like where we do see the confluence of these two uptrending white lines. That is right around a price of $5,340, right around there. So I could see price eclipsing this all-time high, going higher, and that could be a great time to short. Or, if we do just retest the all-time highs, that could be a good time to start building that short position. But of course, this could roll over and we could start to see further downside, as last week did look pretty bearish with this bearish engulfing candle. We could be coming down to refill this gap just below $5,000 a share. But there are also other gaps to the downside that we might be testing. But before I do switch over to the short ETFs, I did want to go over some lines that I do have drawn here, will add here, that did suggest either bullish or bearish divergence. And so I do think those are some things we should be keeping in mind. And so here, looking at this uptrending line that served as the top of that wedge, we do see that higher highs have been forming. And so we would want to look at the RSI to see if there's any divergence there. That would be bearish divergence. And so what we do see over here is corresponding with those higher highs. We do have higher highs formed over here. So that is not bearish divergence. And following that, we did see price going higher. But then following this pivot point here, when we did hit that high with the RSI at 82.18, if I move this other point over here, it does look like we have been forming lower highs in the RSI, whereas with the ETF price, we have been hitting higher highs. And so that is in fact bearish divergence, and we have started to see a rollover in the price. And so now we can look at the lows to see if we have any bullish signs. And looking at this low in the RSI that was hit on January 4th, being at 53.77, it does look like with the bearish engulfing candle that we saw on Thursday, the RSI did hit a lower low, whereas the low in the ETF price is a higher low. And so that is hidden bullish divergence, because we did hit a lower low in the RSI, a higher low in the ETF price. But of course, this could be coming down more, but it does have a lot of room to come down to, $4,700 per share before we get a lower low in the price. And so I do think that we could be seeing some bullish moves in the week or weeks ahead. And so I do think that we will be taking out this all-time high, but I do think overall, big picture, there's a lot of room for us to go to the downside. So I do think whether it's to start a position now, wait for the all-time highs, or potentially to go higher than them, I do think it could be a nice time to start a short position. And so one of those ETFs is ticker symbol SH, which is not leveraged. And here we do see this bullish engulfing candle on Thursday, whereas with the SPX, we saw a bearish engulfing candle. And so because I do think the SPX could be going a little bit higher, I do think that ticker symbol SH could be going lower, potentially to 1188, which is the 786 here, or returning to the previous low of 1181, perhaps even going lower than that if the SPX is hitting a new all-time high. But I do think there is a lot of potential for upside with ticker symbol SH here looking like 24% to the upside if we do return to the SPX lows hit at the end of October. But one thing that I do find a little bit more compelling than ticker symbol SH is ticker symbol SPXU. This is 3x leveraged short the S&P 500. And so looking at that bullish engulfing candle formed on Thursday, if the SPX does hit new highs, I do think that the SPXU will be revisiting some of these levels, if not hitting lower lows. And so dips for accumulating SPXU could be at the 786 level that is at $6.50, or this 100% retracement at the lows hit on March 21st, being at a price of $6.40. But it is quite possible this could be returning to $6 a share. And I do think that could be representing a lot of great upside, as returning to the lows at the end of October would represent a more than 100% move. And, I do think we could be seeing that later this year, perhaps in 2025. But yeah, I just think that there's a lot of great potential to be building short positions now, as the S&P 500 does look like it is rolling over. But I do think it could take some months before we actually see no more new highs. But I do think it will be important to keep an eye on this all-time high of $5,264.85. If we see a close above that level, I do think that could be negating these bearish signs. We could be seeing a lot more upside if that is the case. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.